as we can see, we had another indecisive trading day, which looks like we might be in one of these stepping stone declines. Move straight across, pulls down, move straight across, straight down. So at least you can see, or the general, I mean, this to oversimplify, we're in a downtrending channel. And until we see something major that tells us we're going to be going the other way, you want to stay predominantly short. The NASDAQ had an opportunity with this inverted hammer. Let's make this a little bit bigger. We had an inverted hammer in the oversold area, and one of the highest probability trades is when you see a positive open after an inverted hammer, you're probably going to have an uptrend. Except today, when they open up positive for the NASDAQ, they brought it right back down again, which means we are definitely still in a downtrend. There's no buying strength coming into this market right now. And the S&P. Same scenario. We had an inverted hammer right here on the 200. It opened up positive and just didn't want to go anywhere with it. So that's kind of making things sluggish or to the downside. Interest rates keep heading down. This is the 10-year note, which when it keeps going up in price, the yields keep going down. Crude oil. Let's see, I think let me make some of these charts smaller just so we can see what the trend is. Whoops. I don't know. I mean, Garrison, no, I don't have that perspective. It's right now. I know that we're in a downtrend, and so for at least the next 2 weeks, probably, I'll be in a down or be oriented toward a downtrend. But as far as to try to go out further than that, I don't have the capabilities. And I don't know if there's any need to go out further than that. Let's see if even if we move to a weekly chart. Still looks like over the next few weeks, well, maybe over the next 3 or 4 weeks, we're going to come back down and test this level. However, notice where we are right now. Let's see if I can draw this. We're right about there on a weekly basis. So if it doesn't support right in here, now what we could be seeing is, again, that sideways movement and then taking it down further. This could be the next likely target right in this area. Okay, weekly. Whoops. I'm doing this just great here tonight. All right. Yeah, I think that's what's happening also is right now it appears as if there's quite a few layoffs based upon the lack of, lack of being able to pinpoint how much the cost of doing business is going to be here fairly soon. All right, let's see. We did crude oil. The dollar. Dollar is that slow, steady uptrend going right into the 200-day moving average. I would suspect that once it got to the 200-day moving average, they're going to back it off because that's everybody's target. Then see if it supports on the T-line and does a T-line crunch, pushing up through it. That's the normal reaction once it comes up to a resistance level. Some other things like sugar. That looks like it's starting to turn around, and it kind of has a doji sandwich type setup for tomorrow. Cocoa, same scenario. Got kind of a morning star, or at least a left-right combo right here on the 200-day moving average, which is where it's supported before and before. So that might be a time to be looking to buy. Now, the grains have been getting slaughtered here for the last, not slaughtered, but let's see, VEAF. This looks like it's in that Barry's J-hook type pattern. This is soybeans. And notice once it broke through here, look what type of pattern it had. It had a bearish pattern, came back up, couldn't get above this level, and bam, they took it back down again. It's been a very nice short here for the last couple of weeks. Wheat, which has been trading in a range all this time, is still trading in a range. But if it ever breaks out to the downside or the upside, right now it's kind of testing the downside, it's really not going anywhere. Now, if it holds here, what we might have is a very long, untradable fry pan bottom going on in soybeans or in wheat. Corn looks like it's got that slow over breakdown. Even though it's trading up after hours, I'd keep an eye on to see whether this starts trading lower. I mean, that looks like that slow rollover, a bigger dumpling top. Yes. Yeah, and that's why, soybeans were getting much greater downside because of the amount of crops that were being planted. There's kind of a little, I can't tell what it did today. It opened at 235, closed at 305, so it's a little flutter kicker setup. So this one you might want to be a buyer of on positive trading tomorrow. Let's see if we can make this big enough. This looks like a very good buy on a positive open tomorrow. Let's see, you have on which contract? I'm pulling up the December contracts for corn, and I apparently am not doing it very well. 703. There's the 7. Let's see, where's 703? Right about in here? Oh, yeah, right below this level? Yeah, but I would also think that you've started rolling over. Again, notice you've got the rounding top and the mini rounding top. So things are starting to break down on this. Now, if I was going to do this, and I will probably do this now that I'm thinking of it, I'll put a sell stop one tick below the low of the night trading. If it comes down through there, that tells you the sellers are back in control. All right, gold still bouncing up toward the 50. Don't know what it's going to do once it gets there. Silver, same scenario. Notice your bullish Harami right on the 200-day moving average. And then a strong reversal. That means probably that's your first target. Oil. This is crude oil, which is still in this downtrending channel, staying below the T line. This one you want to stay short. I'm still suspecting they're going to test the $80 level right in here before they can reverse it. Mainly because you got a wave 1, wave 2, wave 3, which is almost getting to fruition. And what have I forgotten? Dollar, interest rates, cattle's, meats. I'm long right now, hogs in this 45 degree for one basic reason. The bigger a reversal signal, the higher the probability your uptrend is going to continue. So I'm just going to hang on to hogs here for a little bit. And especially if they come back up through the highs here tomorrow. This is the afternoon or the evening trading going on. You can do the oil options. Yeah, I think there is a lot of oil sloshing around. If we get any signs of a slowdown of the economy, that might just pull the plug on oil, bringing it back down well below $80 a barrel. And the reason I kind of always suspect that prices can move further than what you think they can move is because they can always move further than you think they can move. I'm trying to think of, again, back about 6-7 years ago, where I think the price of oil finally hit $50 a barrel. And people kept saying, it's going higher, it's never going to back off. And I can remember when I was filling up the T-Bird with just regular gas, which was at that time had fallen back to 89 cents a gallon. And I think barrel of oil had gone back down to like $20 a barrel. So prices can always do what you absolutely don't think they're going to do. So anyways, where are we? Copper, still in a downtrend. We have had a belt hold, still in a downtrend until it closes above that T-line. 55 T-Bird. Okay. Oh, they got the mini crude. I should probably look at the mini crude. I hate trading crude because it's so expensive. All right, now what am I looking at? All right, that's the commodities. This looks like a good-looking chart right here. This is EDU. Nice rounding bottom. That one has a breakout potential back up to the 200. I did not do cotton, did I? Cotton did a gap up. If it opens positive, you can be buying cotton with the anticipation they're going to come up and test the 200, which is the top of this trend channel right here. And all right, here's a perfect example, I think, of why candlestick signals have helped me out tremendously. Here's a situation where this was a perfect buy right here, a bullish engulfing right on the 50. Came up, closed above the T-line, still a good buy. Doji, then had a nice positive day yesterday. But by the end of the day, it came back down here. Now, because, Vicky, I'll do natural gas here in a second. Because mentally, I always think I'm smarter than everybody else when it comes to investing in the market. But when I figured it was time to buy, that I would disregard this signal or that this was going on because I'd already made up my mind that once it started up, it was supposed to be going up. Now, fortunately, I can take that same attitude saying, all right, I'm going to buy, but instead of thinking because I'm buying, it's going to go up, I'm now thinking because there's a buy signal, it's got a good probability of going up. But if I see something that tells me to be back out of it, I'll get back out of it. And that was a strong mental hurdle to try to overcome. And this is a perfect example. I liked BIOF last week. Had a nice perfect setup. But then with the shooting star and then opening lower today below the T-line, it was time to be back out. And that mental process prior to to candlesticks would have been, man, now I know this is going up. It may just be rolling over a little bit. I'm going to hold on to it. And I had no game plan. Whereas now I can see visually, this is not the strength that I wanted to see coming out of a buy signal. Get out of the trade. Worst case scenarios, they come back, or a case scenario, come back, test this level. You can always buy it back on the next buy signal. So it allowed me to start making decisions much faster, even if it wasn't a decision that I'd like to make. That mentally, when I thought we were going up and making big money, now I can say, all right, this one didn't do that. I want to get out of this position. Real quick, back to natural gas. Natural gas stays in a downtrend until you see it close above the T line with a buy signal. Right now, we don't even have a buy signal in here. All right, let me see what else we got. QIHU is another case where the T-line is a very important factor in here. This is your perfect J-hook pattern setup. And the opposite of what I would have done a few years back was I had a candlestick potential sell signal confirmed with selling. The only thing that would make me hold it one more day was the fact that it didn't close below the T-line. And sure enough, turned right around and came back up and did a J-hook. So that was two different instances where one would have had me out of a trade when I shouldn't have been, like this one, and the other one would have been where I would have probably stayed in the trade because prior to candlesticks, I was thinking that was the direction it was going to go, and I was pretty smart, and it should go in that direction. So using the T-line is a very important factor for making those decisions of whether to stay in or whether to get out. KIOR is another scenario where it looked good, doing good, shooting star. Not closing below the T-line yet. However, I'm getting strong sell signals, a shooting star followed by a bearish engulfing signal. That tells me exactly what is probably going on. They're coming back to the T-line. So why chance it? If it opened or started trading weaker, it needed to open higher and trade higher today, which we would have been able to see on a green candle. But the fact that they opened it and immediately started taking it down was a very clear signal that they were not in this in an uptrend anymore. They were in at least a pullback. Okay, and they report earnings tomorrow. So this one, when you start, remember, the signals are the most important factor in your decision making. Everything else now starts being added to that to say, all right, what else is this a true signal? Is this a strong signal? Right now, a shooting star, bearish engulfing signal. To me, that's a strong sell signal, especially with stochastics rolling over. What was the worst that could happen to me? Closed it out here, came down, bounced back up, started coming back up again. You could always buy it back. Or if you didn't see it, it closed up here, the next day opened positive, you can always buy it back. But at least you're not thinking about holding it and saying, well, I'm going to see what it does once it does get to the T-line. So the T-line becomes a factor in two different aspects. If you're very close to the T-line, you don't want to see it close below the T-line. If you can start moving away from the T-line on a sell signal, you want to get out and see what it does when it gets back to the T-line. Okay, WPRT. Nice looking chart. Left-right combo, Morningstar type signal away from the T-line and closed or traded positive today, staying above the T-line. That's a good looking chart. Same thing of our recommendation on AFI. Left or bullish engulfing through the T-line, through the 50. Open positive but came back. But again, didn't close below the T-line. Still a good looking chart, but we know what it has to do to stay in it. It has to open positive and stay positive. Why is this a good looking chart? Because we've got a buy signal in the oversold condition after a big, strong, steady uptrend with a pullback right to the 50. Now we're breaking out through the T-line again. If we buy it, we're anticipating that it moves up steadily. Why? Because the Japanese race traders say, let the market tell you what the market is doing. And the market on this one is that once it gets above the T-line, it stays and moves pretty steady above it. SPRT. Did we do? Oh, SPRT. This is the nice thing about the chat room, is this one I would not have paid any attention to until somebody mentioned it in the chat room. Look at it. It gaps up through the T-line. This one you can start buying. Now it moved up pretty hefty even after we looked at it this morning when it was around 25. But I would suspect this one's got something going on if I'm buying this tomorrow. I'm using the halfway point of this candle as my stop, because if it's going to have something going, it should be going this way, not coming back this way. And IDIX. Now for some of those, let's see, Kramer had the WPRT on his show tonight. He warned. All right. Theos is showing Affy as a shooting star. Yes. And what was it on here? Yeah, it should have been more of a shooting star, because it opened near the low end. That's why you should always have access to more than one charting system, because you would think in this day and time that electronically everything would open and close at the very same levels. I mean, it's all done electronically. But you can have 15 different feed services, and you get 15 different opens and closes every day. So I'm well aware of that, because when a few years back we were doing a lot of research, trying to do research, and I kind of just assumed that everybody would have the same information, but it was surprising how inaccurate that information is on the open and close. It's very difficult to find a service that has a consistent accuracy on that type of information. Yeah, that would be a hard stop halfway down. It should be moving higher. Yes, it would have shooting. Oh, a signal is just a one-day signal. A pattern is where you start seeing the rounding bottom pattern, which is multiple signals. Filtered, yeah, versus unfiltered. A lot of it definitely gets corrupted by the time it gets to the screen. Okay, we'll ponder those problems some other time. Zales has a left-right combo that closed just above the highs, so you can see you've got a wave 1, wave 2, kind of left-right combo. I wouldn't be afraid to be buying this one on positive trading tomorrow. And HEK was brought to our attention early in the day. But that's not the HEK we're looking for. There's a left-right combo. Notice the shadow to the upside. Then they open it positive right back into that shadow. That basically tells you when they took it up, they took some profits. Then the next day, they opened it right back up. The profit taking was over. They were taking it back up again. Let's see. Is your simple moving averages on the charts based on the closing price, or is it something different? I'm guessing it is. I think most chart services use the close, but I'm not sure on that. And it doesn't really matter to me. I just want to be very close to where those moving averages are. So whether these moving averages are based upon the open to close or something, they're probably going to be all relatively close. Okay. All right. I'll get to everybody's. Let's see. LinkedIn is also a Morningstar type signal, but it needs to get up above the T line before you do anything with it. A left-right combo is a doji followed by a bearish engulfing, or I don't see another one on here. A doji followed by a bullish. That's not quite a doji, but that would be a left-right combo. This signal right here was a doji followed by a bullish engulfing. That's a left-right combo, and it's a very strong indicator that there's been a change of investor sentiment, and will usually cause a high probability, high profit move. Okay, all right, let's start buzzing along here. We're so far behind, we're not even going to be able to see halftime. All right, GGIT. Bigger signal, the bigger the signal is, the higher the probability. This one is probably going to be recommended tomorrow because you've got a huge bullish engulfing. You've got the day of indecision or the doji sandwich setup. If it opens positive tomorrow, you want to be buying because the probabilities of that same move that we just saw could be here. Now, even if it came right up here, you'd still have about a 7% move during the day, even on a day trade. ECZ by S dot EZCH. This one, same scenario as what we looked at before. Notice the shadow to the upside. Then they open it right back up into the shadow. That tells you the profit taking's over. That's what you're looking for. If you see that big shadow, see how they open it the next day, because that tells you the profit taking came in. But notice what the force is on this trade. It's this gap up, a kicker type signal, taking it up strong. That means you should be in a strong uptrend, so we're just waiting to see when the profit taking is over. And PCYC. Left, right. There's your left-right combo. Doji followed by a bullish engulfing signal, starting back up. This one I wouldn't be afraid to be buying, especially if it comes up through the T line. MYGN. There's your big move. There's your double doji setup. Big move, doji, pulled back, doji. So they're not real anxious to sell. The next open, you want to buy immediately because they're going to take it higher. Now they've taken it up big. You got indecisive profit taking, an inverted hammer, and we know very simply what the inverted hammer should have, a positive open. That tells us the selling has stopped. You want to be a buyer, especially on a positive open tomorrow. And HTZ, whoops, S dot HTZ. Trying to get some. Left, right, a doji sandwich. Now, what's unique about this doji sandwich? Here we got kind of a left-right combo with after an inverted hammer, a doji. If they open it positive and trade positive, what's going to happen? They're going to be breaking out through this level. When everybody sees they're breaking out through this level, they're going to be jumping in. So there's a good possibility you can have this type of move again, breaking out into new territory. Why don't you have hollow candles? How can you tell where open and close is on? the open and the close is where the candle is. This is where it opened. This is where it closed. Let's find something different. This is where it opened, right here. This is where it closed. It's the, red is, on the red candles, tells you it opened here and closed lower. The green candles told you it opened here and closed here. And Judy, that'll be more clear. I'm starting to do some of the new training CDs with the Metastock, and they've got the hollow candles. But red candles where they open it and close it below where they opened it. Green candles where they open it and close it above where they opened it. Let's see. GILD. Inverted hammer, gap up, bullish candle. This one's going to be a 45 degree, coming along the same magnitude here. This one's still going much higher. And fry pan bottoms. We've got one in Office Max. Notice how it broke out, come back, doing a kind of a J hook. Wouldn't be afraid to be buying this one on Positive Trading. And who wrote that one? CLSN. Nice little fry pan. Notice what it did today. Closed right smack dab on the 50. After a kicker type signal. Notice it opened here, closed here, gapped up, opened a little bit above where it opened the other day, and went this way. Now it closed right on the 50, which makes this very simple. We already know it's going to be more upside. So if they open this positive, you want to be buying immediately because you know that the 50 is not going to be acting as resistance anymore. Santa. Keep an eye on this one. If they get this back up through the 50, it's got a good chance of coming back up here again, which is going to give you a good 40-45% upside potential. And let's see, MNST. There's your belt hold, and you closed right on the T line. If this opens positive, you're probably going to be coming back up to test this level. That's a good looking chart. That belt hold pretty much tells us that whatever buying and selling is going on, the selling was all sopped up right here, and the bulls stepped in. There's nothing in the way right now for the bulls. Let's see, we did the ZOLI, FNI. Kind of a double. There's your left-right combo again. Notice how far away you are from the T-line. Now you've closed right on the T-line, which makes this very simple. You've got kind of a morning star signal with a left-right combination. If this opens positive, it immediately tells you that the T-line is not going to act as resistance. You've probably got a good runner, maybe the third wave starting. Please wait. Gary, please wait for what? Let's see. CEL. Let's make this a little bit bigger. Yeah, biotech acted good. I don't understand that. I thought the biotechs would have had some problems based upon how the political situation went. Doji, gap up. If it opens positive tomorrow, you buy immediately. They're at least going to bring it up to the 200. Please wait, biotechs. The question about, was there a, oh, I see. Okay. Yeah, I'll get to every one of them. Don't worry. Well, most of them, obviously. Okay. There's your doji sandwich. Candle about this big. Where do you think, if it opens positive, your logical target is going to be? So even if you were day trading and it opened positive, you buy immediately, because where are they going to take it to? Probably right up here to the T-line. That's still going to be a nice little percentage move. And it gives you a target to where to start taking profits. Let's see, GME, kind of a little scoop type pattern set up. Morningstar signal. Anytime you see a flat trading area with a Morningstar signal at the end of it, there will be, that's usually acts like a slingshot, like that mini scoop pattern. ZIP, that big move up, profit taking at the 50, a bullish Harami tells us the selling to stop, close right here at the 50, very easy. If it opens positive, you want to be buying immediately. Where's your next potential target? Probably right up here to the 200. Why? Because he had a dramatic kick out of this area. It's not a kicker. I shouldn't use that word. A dramatic punch to get out of here. And that tells you there's some very strong buying coming in. Well, Shuzbots. Okay. And one more on the long side, MVDN. Bullish engulfing right off the 50. See if they, this one would be a strong buy. Now, there's some good shorts. Up. GOLD just stays short. This is the type of dumpling top that makes for big money. This is what, if you can catch something like this is what we're looking for, is that rollover and then slam. There you go. And these are very easy, these are very easy trades, because once you start seeing these roll over, what do you think is going on in investor psychology? Everybody's starting to get scared, and then any inkling of bad news, bam, they start taking it out. Or taking it down. They want to be out of these very fast. SCSS, another one that is a wave 1, wave 2. There's your left-right combo, which means there's probably still more downside. You probably want to be shorting this one on any weakness in the morning. And I think, is this close to it? Another one that's rolling over, starting to pick up some steam. Remember, where do people sell? They sell panically at the bottom. Oh, is that an island reversal? No. No, that's just strong down move. Let's see. J.C. Penney has that type of rollover and then bam, bam. So this is why, even if you see one of these days where they take it down and they bring it back up, but it's a nothing. I mean, this is a small move, so it's not that big belt hold type move. It's just a profit taking for the shorts to the upside. Then if you see them open it lower the next day and start taking it down, that tells you this was just profit taking. You want to stay short in that type of situation. Leapfrog is an illustration of the bigger the signal, the more compelling your downtrend is going to be. Anytime you see something that huge, you want to be short. There's S-Fun, left-right combo, big day. You want to be shorting that. And I think it was S-Fly also. I like the S's. Big, bearish engulfing, and now getting down to the point where it might be time to start looking to cover. But we still need to see that confirmed buy signal. Guru, let's see, that's Guru. Anyways, this one. GROR, Gold Resources. Notice the rounding top. This one you want to be shorting on any weakness. If this is wave 1, wave 2 could be a long ways away from here. And KBH, another one that's rolling over. Notice where it closed, right here on the 50-day moving average. If they open it lower, the 50 is not acting as support, they're going down to the 200. And who wrote that one? I can't even figure out what I wrote there. Well, you shouldn't drink while you're doing this stuff. OSIR, another one that's just rolling over, probably heading for the 200. And CDE, which had been a good long until when? Until it closed below the T-line. Came all the way down. Now it looks like it's doing that bearish J-hook. This one you want to be shorting on any weakness. And RRD, another one, just starting to roll over. This is where the panic selling starts to come in. That's where you can start making some big profits. And pause. This is one of my favorites because I used to color eggs with this, with pause. This one I would be shorting on any weakness, especially if it broke through the 200. And Ever. Shooting star, bearish engulfing signal. Doji just below the T-line, bearish engulfing, left, right. That is not a bullish sign. This one you definitely want to be shorting on any weakness tomorrow. How could we have a scan on a down rollover? You don't really need one. I guess we could probably do a scan on that. It'd take a while to put it together. Yes, and that was the last one on here. MCP. That S.MCP. All right, look what we got here. Rollover, big down day, doji type day. If they open this week or tomorrow, you want to be shorting immediately. So this is why you want to know your patterns as well as your signals, because you can apply the different signals set up after a pattern. So we know what our doji sandwich looks like, and we know that if we see a doji sandwich setting up right after a dumpling top, but there's probably some good slamming coming on this one to the downside. Okay, do we have any questions on candlesticks? Could that be a hammer? Yes, it could. That's why we're only looking at it that if it opens lower tomorrow, looking for that doji sandwich. We're in the oversold area. If it opened positive, That's a completely different scenario. That might be a bounce back up to the T line. So that's why we have to know what to do once we see an open. Again, in this case, it has to open lower to start that downward trajectory. If it opens positive, we're looking at maybe a morning star type setup. What is a dumpling top look like? You're looking at it right there, that round, slow rounding top. Remember what a fry pan bottom looks like? Let's see, fry pan bottom looks like this slow rounding bottom. Well, dumpling top is the opposite. It's a slow rounding top. And what do we expect from investor sentiment after a fry pan bottom? Exuberant buying. What do we expect after a dumpling top? Aggressive selling. Let's see. I get the entry points. When do you decide on profit taking and exit points? LM, the candlestick signals will show you when it's time to buy. They also show you when it's time to start selling. And that's the same criteria as buying. It's sometimes the further you move away from the T line, the more likely you're going to come back and test the T line. That's when you should be taking profits. Let's see. MCP, how do you interpret the stochastics on this chart? That it's oversold, but remember, where does the exuberant buying or selling come from? This is just a setup. This is your dumpling top setup with a potential doji sandwich. So we know if it opens lower, it's probably going lower. If it opens lower, we've got a bearish doji sandwich. If it opens lower, where should it not go to at all? It shouldn't come back up through the top of this this candle or today's trading. So we got we know what to do. If this opens lower, you start shorting it. If it opens higher, you don't pay attention if you're thinking of shorting it. Now, if you're thinking of shorting it and the market opens lower and this opens lower, get in it right away. If the market opens higher and this opens lower, be a little bit more tentative. If this opens higher and the market opens higher, you're probably not going to think about shorting it at all unless the market turns back around and it comes back down through this level. But if it opens lower and the market's kind of soggy, you probably want to be shorting it right away. In a left-right combo, does it matter whether we have a flat doji or a chunky spinning top? No. Remember, a doji or a spinning top tells you there's indecision going on between the bulls and the bears. And with that indecision, the next day they're coming in with a roundhouse bullish engulfing. It's not an indecisive signal. It's definite. So after a day of that little jab of indecision, now bam, they come around with that the big definite indicator which way they're going to take it. Let's see. Affy really confused me. What was the point of taking out Friday's high today only to close unchanged? What was the point? Well, I don't know if there's any point. They don't. All it was telling you is we've had a bullish signal, and then it came up and then backed off. But it came up. So this is still a bullish signal. Just today we've had a little bit of backing off. What do we want to see to confirm this bullish signal? That it opens and starts trading positive tomorrow. A belt hold. Which one had the belt hold? Oh, I can't remember. The charts that we're looking at tonight are from CQG. The scans I do are either from Metastock or TCNet. There's our belt hold. Okay, a belt hold is when you see them trading in a range and then all of a sudden they gap it way down below that range and bring it back up into the range. That's a belt hold. That's the Japanese rice traders saying that the two wrestlers are fighting. One's trying to back out of the ring. The other one grabs his belt and pulls him back in, and they're at it again, and it takes off. Okay, all right. With that, Jim, go ahead and do the double line, and do the double line in 12 seconds. We'll try to get as much as we can with this batch. Whoops. Lulu, try to support here on the 200. I wouldn't be a buyer of it, though, until it breaks out. As you can see, there's kind of a wedge formation. It's not doing, whoops. All right, do the other double line. THRX did an inverted hammer signal today. This one you can get ready to buy, especially on positive trading. Now, if it opens lower, obviously you stay short. Okay, and SHW, Shaw Group. Oh, Sherwin-Williams. This is a nice chart. Kind of a scoop pattern, kind of a cradle pattern, but the important part is you have a indecisive trading with a gap up. It's definitely a gap up. You can buy this on positive trading. At $150. And what was it? JRCC. This one you stay short. Oh, you can't short it from here, but you stay short. You're in the oversold area. This is the type of trade where if it's in the oversold area, and let's say tomorrow they gap it down here, you want to cover it, because that's usually where they're going to end the downtrend, is when they gap it down in an oversold condition. IRWD, sorry about that. This one you stay with. There's your left-right combo. Doji followed by a bullish engulfing. Close right here above the T-line. The next day they use the T-line as support. Continue to hold this one until you see a sell signal. AT&T. Whoops. A piercing signal. Bringing it back up a little bit. You don't buy it, though, until it closes above the T-line. SYKE. Another one that has profit taking after a big gap up. Looks like they're supporting right at the level that they topped out before. And right here on the T-line, this one's very easy. You can start buying this one on positive trading. And let's see. DNDN. DNDN with a little piercing gap up. This one you continue to hold until you see a sell signal. SPRD. That went off into the Never Never Land. SPRD. This one you probably want to stay short. Not quite in the oversold area, which tells me they're probably going to take it down to the 200 before they can find some support. SQNM. I don't know. Yeah, this one, let's see. May have to step back. Ah, that's not what I want. Well, Shazam. That's the type of person that doesn't like to make the same mistake 7 times. I don't know what to tell you there. It's just, this should have been more confident, but you had a big bullish signal. So look to buy it. You just have to be very careful once it gets to the 200. SGI, stay short until you see a buy signal. It's not there yet. HERN, there's a belt hold. If that's a true signal, you definitely want to be a buyer on positive trading. Remember, they've wiped out any last of the sellers here, and there's no sellers in front of them at this point. ARNA starting back up again. This one you can be buying, especially if they open a positive tomorrow, with the anticipation that your first target is going to be somewhere up in here. Let's see, S.TC. Better make this a little bit bigger. This one you continue to hold until you see a sell signal that closes below the T line. SLF. This one also stay with as long as it doesn't close below the T line. And Ford. Ford, hang on to this one. You can see it's a slow uptrend as long as it stays above, right now above the T line, or definitely if it stays above the 200 on a short-term basis. Yeah, just hang on to Ford. Ford is, as you can see, it's bobbing and weaving to the upside. Goodyear Tire. This one is still in a downtrend. You want to stay short on this one. And, let's see, FE. S.FE. This one you stay short. You can see that you're in a downtrending channel. So you suspect that once they failed here at the 200, your next target is probably coming down here into this area. And let's see. MTW. MTW, not anything that I'd go after aggressively, but obviously it is supporting here on the T line, but nothing that would tell me the bulls are rushing in. Let's see, GM. Slow, steady uptrend. That's about all you got for this is a slow but steady uptrend. You've got your piercing signal. It's keeping the uptrend going. And CMG. Oh, CMG. You're just below the T line. You're in a downtrend. They've got to get it up above the T line to go back after it. Otherwise, you probably want to stay predominantly short on this. I would definitely be shorting this one if they took it lower tomorrow. ADNC. This one, all you can do is stay with it as long as it stays above the T line. And notice where you are right now, just about where the 50 and the T line are going to cross. That'll be an important area, especially not so much the T line because there's not that many people watching the T line. It's when if it gets up above the 50, especially breaking out through this level, you've got a lot of running room up here that you don't have any resistance to worry about. And let me see what else we got here. XRTX. Another one you stay with as long as it stays above the T line. And OVTI. That kind of went dead for a while. It's still kind of dead. This one you want to be trading someplace else. It's in a sideways channel. Not anything that's going to help you make a whole bunch of money. Apple. Apple, stay short until you see a buy signal. Nothing showing that Apple's turning around. Somebody would say, well, it's in an oversold area. It's been oversold now for a month. That doesn't matter. You need to see a buy signal. ICLR, this one you stay long, as long as it stays above the T line. And CENX. This one also is sideways. It's in this wedge, this pinch. I would be out of it until it breaks one way or the other. And GDX. Whoops. Let's try this S.GDX. Still in a slow downtrend. I'm sure it's going to come down here and test the 50 before they can bounce it. DDD needed to stay above the T line, which it didn't. So now you've got an evening star signal. The Stochastic's rolling over. This one you might start looking to go short. But your first target obviously is going to be here at the 50-day moving average. Let's see. Okay, Smith & Wesson. This one you stay long. This had a good reversal. A doji right here at the bottom of the trend channel. Then gap up through this resistance level. Your profit taking's over. Continue to stay long until you see a sell signal. And let's see, we got Maxwell. Not a whole bunch here just yet. Now, you just did get above the T line, so if it does open positive, you can be buying this one. And AXL. Whoops. S.AXL. Stay short till you see a buy signal and the close above the T line. RGR. This one you stay long. This is you had a bullish Harami right on the 200, gap it up through the 50, the T line and the 20 into new territory, gap it up again. This one has a lot of buying coming into it. Stay long as you don't see a sell signal. In Las Vegas Sands. This one you can be buying, but if it opens positive, you want to buy it. You just have to be careful as soon as it gets to the T line of what you should be doing. And McDonald's. Well, This one you also stay short. Wave 1, wave 2, wave 3, still more downside. Remember, this pop-up isn't doing anything dynamic. It's very indecisive. Let's see. A fry pan bottom has a big rounding bottom to it. A cradle has a big down day, then maybe 4, 5, 6 flat trading days, then a big positive day at the other end of it. Need another hour for more, okay? Don't worry, we will be back here. It's not like this is a one-time deal. We do this every Monday night. This one you can be buying on positive trading, kind of a little scoop pattern setting up. So your first target is to see what it does once it gets here to the 50. If it gets through the 50, there should be a slingshot effect that will take it out much further. COV, kicker type signal. This one you can be buying on positive trading tomorrow. SVNT. Nothing you want to do with this until it closes above the T line. Groupon. Groupon has this dumpling top. Now it's starting to break down. So you shouldn't be in it. You can't short it because it's below $5. And glue. Glue also stays short. Well, you can't buy it until it comes up through the T line. Observing for 2 weeks now. What is the annual rate of return for stocks with your system? Terry, we don't have those statistics. Not that we're trying not to keep those statistics. We're trying to teach people how to use the information that we're conveying here for their own trading style. So that means quite a bit of difference between somebody that's swing trading to somebody that is scalping to somebody that's holding long term. So to try to organize what type of returns you're going to have would be, inappropriate, because we're going to have people that are scalping on a recommendation. We're going to have other people that are holding it long term. So what was the rate of return for that stock? Some people got a 3% return today. Somebody else got a 40% return over the next 4 weeks. So all I can tell you, Terry, is just keep observing to see whether the probabilities of being in the right trades at the right time get improved by using the candlestick signals and identifying the pattern. Yes, we're still short STX. So that's that little failure at the T line or at the 50. And this is where you kind of observe the obvious. The obvious is you're in a downtrend. So anytime it hits a resistance level, they back it off. Now we're right here at the 200 with stochastic still heading down after sell signals. It's probably not going to hold the 200. So what becomes the next obvious target? Well, probably the downward part of this trend channel. I will be fully positioned at any one time. So, for example, let's say you have $1 million portfolio. I'll have probably 12 $80,000 positions on any one time. Now, that doesn't necessarily mean I've got 12 long positions or 12 short positions. That might mean I've got 9 long and 3 short. Or, depending on which direction the market, it might be 9 short, 3 long, or 8 short, 4 long. So I've got the money exposed to the market, but not necessarily all in the same direction at the same time. Now, if we see that we're in a rip-roaring bull market, yes, you might see 12 long positions on, or if you see a rip-roaring short market, be short 12 shorts. But I go on the philosophy that that the military uses the number 7. That's the best number for people to manage. So a few more than that, trading or having positions on is easy to manage. Now, what's her name? Susie Orman says you shouldn't have any more than 4% of your funds in any one position. Well, that means you had 25 positions on, and most people can't even manage. There's analysts on Wall Street. They pay millions of dollars to analyze 5 or 6 stocks, and they can't do that very well. Why should anybody expect to be able to manage 25 stocks? So I keep it around 10 or 12. I know that was a much longer answer. I could have just said 10 or 12, couldn't I? Whirlpool, you're right on the 50 or on the T line with a doji. Very simple. It's going to move in the direction how they open it after the doji. Did I do that? Oh, SGI. SGI is, S.SGI. Still, we want to be short this one until you see a buy signal. Now that you're back below the T line. Oh, excuse me. They must be putting baby oil on this football tonight. What the heck is going on here? Oh, excuse me. Okay. Yeah, above the T line usually means the closing price. You did better than I did, Eric. My mother said, should we buy Ford Motor Company at $1? And I said, let's hold off a little bit just to make sure they're going to get through this rough patch. Unfortunately, when I was a stockbroker back in the late 70s, early 80s, my mother said, Chrysler is trading at $2.25. Should I buy a couple thousand shares? And I said, Mom, whenever a company has to go to the government for loans, that's just, that's throwing good money after bad. And so I talked her out of probably over $500,000 of equity. But that was before candlesticks came along. Slingshot effect is just where it gets to a level and then it really takes off because it's just kind of like being boosted out of there. Is that what it is? Yeah, I've been trying to knock that thing off. I've unclicked it. So anyways. All right, everybody. We can all talk about the ones we missed. That's right. So with that, let's go watch the Steeler game. We'll see everybody in the chat rooms tomorrow.